Well, hello, everyone, and welcome back to Man and Machine here with PeakBot co-founders and Mark Phillips from Harvested. Gentlemen, how are we doing this morning? Mark, you first.
Good morning. Happy Monday.
Happy Monday. Glad to be here. The reason I needed to say Mark, you first is because I always leave it up in the air, and you guys, you to your credit, have figured out how to fall in line and give a proper response, but I felt like I would do better for you guys. Ben, how are you this morning?
It puts us on the spot, but you're right.
Yeah.
We figured it out.
You guys are good enough to figure
We're grown adults here.
Ben, what's up with you, man?
I'm doing good. The weekend was pretty good. Ready for another week. I think this is our first week of full trading in who knows how long.
What feels like forever. And
yeah.
I bet it was a good weekend for you, Ben. You didn't have to worry about, your Giants losing or winning or any of that. Some great football over the weekend.
Yeah, go Bills.
Go Bills. I have to agree. I mean, I'm wearing my Jets, but who cares? So we got a great show for everybody today. We will take a quick look at PeakBot picks and how the PeakBot team fared on our trend spread credit spread selections that expired Friday. Of course, we'll be doing stocks in real life. So we will be talking about one of the big airlines today, UAL. So we'll talk about our experiences with these airlines, take a look at the stock, maybe how PeakBot traders might be able to play it. Of course, not financial advice. And then we're going to learn a little something. We'll have a great education session today on credit spreads and a few other things. So let's get into it, guys.
Cool.
Let's do it. So Ben's got his chart up. We're going to quickly knock out these PeakBot picks, and we're going to keep moving. Actually, Ben, really quick, I just wanted to share my screen and just give an update to the people. Going back from last week. Okay, so week 14, we went 6 for 9 as a team. Your boy here, Dillon, went 3 for 3 with 2 bulls and a bear. I am on Thomas's tail right now with this win rate. Okay, I'm 1 away. So we might even reveal this morning that we jump him here. But Ben is still in the leaderboard for weekly wins with 6. I'm right behind him with 5. So these were the picks last week. I won it with Dash, Meta, and Starbucks. So let's see how we did this week. Ben, I will kick it back to your screen, and I will share our picks.
All right,
so,
let's do it.
Ben, you had 2 bears and a bull. Actually, all of us did. We love to copy each other with that every week, it seems like. But Ben's first bearish credit spread was on Costco, C-O-S-T. You earned $255.5. So, Ben, this was a condor. You picked the direction.
I did.
All right. So you
picked bearish, right?
You picked bearish. You were trying to stay under 935.
Oh, you got to be kidding me.
Oh, you saw it load before we did. Okay. Tough. All right. Last minute.
Again, this is a situation where I would have won due to the premium I received. Yeah. But overall, I lost.
For the picks, not doing it. Not doing it. All right. You were also bearish on ticker AMAT for $54 in premium. You were trying to stay below 175. And he does.
All right.
Okay. All right. What is that? Applied Materials. I've never personally traded, but I always see it on the watch list. All right. To round you out here, and keep a nice win rate for the week. You're looking bullish for DocuSign, ticker DOCU, for $33 in premium, trying to stay above $87, and he does.
All right. 2 for 3.
2 for 3. You're not happy with it.
I'm not. I'm regressing back to our, stated 70 to 75% win rate where we kind of fall out to on average.
Yeah.
So I'm definitely regressing back to that. But
well, you know what? You've been switching up your strategy.
I've been going for premium. That's what happens when you go for premium. Probably going to lose less or more.
Although in weeks past, this was more boring than normal. You had one huge one with Costco, and then your AMAT and DocuSign, $54 and $33 in premium. That's normally lower than you would normally.
And look at that. I lost Costco.
Yeah. You're switching things up. So, all right. Let's see what Thomas did. Thomas was 2 bears and a bull. He was bearish on Home Depot, trying to stay below $395 for $112 in premium, and he does.
He does.
He was bearish on ticker UPS, trying to stay under 126 for $27 in premium. These are weekly credit spreads, by the way. And he does. So again, these were from last Monday to last Friday. His last one was ticker GS, Goldman Sachs, bullish for $266 in premium, trying to stay above 565.
Ooh, Thomas, 2 for 3.
YT 2 for 2. All right, I have real opportunity right now.
Rare slip up from YT. Yeah, Dillon, the door is open for you. It's wide open.
Let's see what we can do. All right, 2 bears and a bull. The door is ajar. I was bearish on Pepsi. Only $13 in premium. Give me below 155.
Wow.
Yeah, baby.
Well
Boy,
below.
talk about a bearish stock. I mean, I'm a Coke guy before I'm a Pepsi guy, but tough to look at there. By the way, I'm giving us just a little bit of music here. Okay. I was also bearish on ticker ON on semiconductors. I was bearish trying to stay below 66 for $21 in premium.
Wow.
Oh my goodness. Let's look at the 5-day. Let's make sure I'm not messing anything up.
Dillon, did you just start music?
Yeah, I did. I said I wanted to give us a little bit of music.
Oh, okay.
Okay, so I wasn't out of control here. This has just been a terrible week for this stock.
Yeah, just took a dump.
Wow.
All right, 2 for 2. This is where I was bullish on QQQ. Trying to stay above 510. Not good.
Didn't hit it.
All right, so now wait, hold on. Did you go 2 for 3? Did we all go 2 for 3?
Yeah, we did.
So now I don't think we've had this situation where we all go 2 for 3. Now, Ben, I think what we should do is we got to go premium, but only off the winning plays, obviously.
No, it's premium for your whole position, for your whole all your
Premium
picks.
earned even on the losers?
Yeah.
Okay. Well, then I guess Ben. I actually, Thomas takes it here. Let me share my screen really quick, just so you guys can see the premium here. Let me zoom in. This is hilariously small. All right, so Ben, we can do some quick math here, but I'm just eyeballing this. Thomas is here. You're here. He's got you beat, and he's got me beat. So I think Thomas takes the W.
Wow. That's crazy.
He had more premium. I mean, he went for it last week.
Thomas never goes for the premium grab. All
Well,
right,
he was
Thomas
sick of
wins.
losing. Yeah. So,
Listen, I'm fine with giving Thomas the W. If it was,
he needs it.
If it was between me and you, I would argue.
Yeah. All right. Well, there it is for PeakBot picks. Maybe a little bit of controversy, but Thomas, if you're awake, manning the customer service line, congratulations. All right. We have our picks that are expiring Friday. If you want to see how we're doing with a few hours left on the clock, tune in Friday for our live show here on the Tradier Hub at 11:55 a.m. Eastern. But let's get into some good stuff. Let's talk stocks in real life. I'm moving myself down. I'm getting Mark up here. Fellas, United Airlines. Good leads the way, Ben. Is that their tag?
Apparently that's their tagline. It's funny because as we're doing these stocks in real life, I'm literally Googling like, what is this company's slogan or tagline or whatever?
Yeah.
And all these weird things come up that I've never heard of. And granted, some of it is just like they ran a marketing campaign that was labeled that years ago, but it was like all I could find. So that's what I threw in anyway. But yeah, United Airlines, good leads the way. How do you guys feel about United Airlines?
Mark?
Just in doing some research for this show, I didn't quite realize what an incredible quarter they've had. Like the last 4 months, or maybe it's more like last 5 months, they were trading under 40 last August, and now they're at 105. So, in 5 months up almost 150%.
Yeah, that's
I didn't realize
crazy. I know my dad is wheeling United right now, and it's been absolutely crushed. And honestly, this is a wheel stock where it's actually beneficial to get assigned shares because he has been realizing gains up this ladder that it's been climbing. So collecting premium and realizing gains on assigned shares, double dipping all the way up. It's been great.
Oh yeah. I mean, if you caught any of these dips, I mean, stock just keeps, dips a little bit and then just keeps going back up. So that's a perfect, wheel candidate.
Let's get a chart up on UAL quick to see this growth. I have. Oh, Ben, you already got it. Okay. So yeah, relatively not flat, but boring until August. And then what happened? Obviously, there's a lot of crazy stuff with airlines and conglomerates and these huge businesses just buying up all the other ones. Did anything crazy happen with United this year? From I'm not sure, but this is just outrageous since August.
I don't know. I haven't been following personally. I'm sure there were probably multiple catalysts that just caused it to blow up like this, but
so
it's been quite a ride.
I'm also looking at it. I know we'll get into our experiences. We're getting right into the stock here. Ben, you mentioned it on the wheel watch list. Here it is on the wheel watch list. By the way, reporting earnings on the 21st. Okay, so appropriate that we're talking about this now. Next Tuesday, they have their earnings report, which is why it's highlighted red here on the wheel watch list. It's labeled as bullish high. You need, the sold strike right now would be at 103 on the wheel for $75 in premium. It's a $5 spread. Sorry, how wide is it? Yeah, $5 spread right now on $100 stock. Yeah, that's been fun for your dad on the wheel all year. Yeah. Okay, so, and I was going to look at what it's doing on our trend spread watch list as well, but quickly, do we fly United, guys? Ben, I think you're a big United guy, right?
Oh yeah, I've got a United credit card.
Yeah, Ben loves
out of Newark Airport. Like they've got their own terminal there. They've got the club there. It's nice.
Yeah, Mark.
When I moved to Chicago in 2016, I decided I was a Delta guy. Being out of New York, they have awesome setup in LaGuardia. Now much better. But I was like, moving to Chicago, I got to pick between American or United. Like, they're the major hubs there. Went with United, started racking up frequent flyer points. I was like committed with the credit card. I was like flying them anywhere I could. And I would just say it was just poorly rewarded. That like my experience with them was not great. That like even getting up to like 1K or whatever their top tier was, like all their rewards were worthless. You got like free upgrade passes that were never usable. It was not a fan of United in their loyalty program. So okay. I switched back to Delta when I moved back to the East Coast and could not be happier.
Wow. Hey, I love that hot take. Let's torch them a little bit. Hey, watch out, United Airlines stockholders. You're in trouble after Mark's statement this morning. No,
the stockholders are doing great because they're too cheap to pay out their loyal customers.
Yeah.
Yeah, there you go. Retained earnings right there.
So I fly. If I can find a United flight that's within reason for wherever my destination may be, flying out of Newark, Ben makes a great point for Jersey guys here. They have their own terminal. I prefer United, but I'm not married to United. I just booked a flight out of Lehigh Valley down to Florida for May. Allegiant, it's just first row. I mean, and it's half the price of the United flights. So yes,
Allegiant,
I like United.
I think Allegiant's the new Spirit. Now the Spirit's Spirit.
Yeah. Now, yeah, exactly.
The Spirit's the Spirit.
Yeah, that's exactly right. By the way, on the trend spread watch list, for those of you who are not familiar, our trend spread strategy rolls contracts and trades with trends, so your capital requirement isn't nearly as high. It's bullish moderate on the trend spread watch list here with a 72.6% pop, a 13% ROI, 3.5% buffer. Ben, what I'm looking at here, outside of the fact that they're reporting earnings and it's highlighted red, they're almost hitting core 4 here. A little bit of their pop's a little low, but everything else meets. So again, $6 spread here. So, or $5.50 rather, earning $72 in premium. Good play. I've definitely traded United in 2024 on trend spread. Never put it on the wheel for myself, but definitely one to keep an eye on. I'd be curious to know. We don't have to do this now, but I might look up on TradingView what their next year looks like from an analyst rating standpoint.
I could pull it up while you keep talking.
I guess they didn't get caught up in any of these the flight trouble this past year, 2 years? Or did they have a door flying off? Was that United? Who was I guess that was the Boeing that was making the planes. That was
I don't know what
problem.
airline it was though.
But looking back, like further, that's kind of where I was thinking, like, how is this traded historically? And trading at 105 is right about the pre-pandemic level. So
really?
I think it hit a peak in 2019 of like 95 or 96. So it's been a long, I mean, they cratered in March of 2020, and then it's been a long churn in this 30, 40, 50 level. And it's literally only just been the last quarter that they've broken out back to the levels they were trading at 5 years ago.
Yep. And by the way, I'm looking at other publicly traded, stocks, airlines. Obviously, you have American Airlines trading down at $18, JetBlue at $7, Southwest at $33, SkyWest at $111. If that's even, I've never even heard of that. But yeah, they're crushing it. I mean, look at that. Look at this analyst ratings here, Ben. What are you finding?
Yeah, I mean, so we've got 26 analysts. Most are saying strong buy on the chart or the dial there, and then we've got 21 analysts reporting on a 1-year forecast, which goes as high as $150. Which again, that's still climbing high. The average falls out to almost a 20% gain in the next year. And then the minimum is $100. So analysts are definitely bullish on this stock.
Man, I got
after an already incredible run up.
Right.
That's what I'm saying. I was not expecting to see this right here after the year it's had.
The velocity of this move, right? Like all of the retracement of the last 5 years has taken place in the last 5 months.
Yeah.
If they weren't reporting earnings. Okay, Ben, while you're up here, scroll down on the right-hand bar to see their last 4 earnings. To see if they're finishing above or below. There should be there it is. All right, so they've beat their last 4 earnings, it seems. Not by much, but who cares? I always like to see that when we have a looming earnings report coming up. If they weren't reporting next week, and it's not this week, it's next week. My contract would end before I do it, but I don't want to forget on trend spread and roll into next week when they are. I was going to add this right now if they weren't reporting earnings. I love that chart. I love those ratings. Mark, what's your experience trading airline stocks? I mean, in the past, recently, back in the day, I mean, do you stay away from these? Do you gravitate toward them or nothing really?
Individual names I don't have much color on other than I hate United. But I remember back in the day, some old pit war stories. The Amex had an airline index that was XAL. And it was the Amex had a bunch of these like cash indices that have kind of gone away now that ETFs are so popular. But XAL was one of those like randomly juicy trades that there were a couple players came in, gave up a lot of edge. Like the people just love trading this airline index. So XAL was like one of those like hot pits back in the day. And, back when there were a bunch more airlines, right? Like you mentioned the consolidation at the beginning. The reason you guys have such an amazing terminal over in Newark is because that's the old Continental, right? And so I suspect the consolidation of that industry, along with ETFs and whatever, led to the demise of that. But airline indices used to be pretty fun to trade. And the vol's up there. I mean, I'm just looking at United's vol. I think at the money 30-day is like at 60, which is actually the highest it's been in a while. So, if I'm looking at this now and I see those analyst ratings in the front, I'm liking overwriting this potentially or wheeling it or catching some of that premium where, you're obviously selling a little bit higher implied vol. You can stay bullish. But if you own it, you're selling some pretty fat calls against that at 60 implied vol. So I like the wheel on something like this.
And for me, it's just within wheel budget. It's okay. You're gonna have to set aside $10K, but you're getting a decent return. About I don't know what the math was.
I think the key too is you don't feel bad when you get assigned the shares.
Yeah, they're not going anywhere.
There's a lot of the advantages of the PeakBot wheel is that you're going to have that put, right? I do look at that like face climbing, chart over the last couple months, and I'm a little nervous to the downside, right? But owning that put when you're long the shares too, like, of course you're giving up a little of that extra premium, but cover your behind here. Like, it seems prudent also.
Yeah. Yeah. By the way, something we haven't done before, but I was just curious when I was looking at the other airline stocks. I'm pulling up Yahoo Finance here, and this is the airlines stocks. 17 of them, I believe, are being counted here against the S&P. Okay. So this is the last year for airlines against the S&P. As you can see, S&P coming in right around 22%. If you were to be trading all the airlines, again, this is kind of a silly stat, but up 65%, over the last year, 6 months. Here's the number. Boy, S&P over the last 6. That's fun. That's not fun to look at. But anyway, so you can see here, overall, they're doing pretty well. And by the way, here's your delta. Market weight higher than United Airlines, even with a cheaper stock. You can see their market cap here. United Airlines is at 35 billion. Delta's at 43.
I didn't realize that Delta was a larger company than United in terms of market cap, at least.
It is. And look at these year-to-date returns already. January 13th. But as you can see, average analyst ratings: Delta, United, Buy, Love, American Airlines. I am not familiar with SkyWest at all. I don't know if I've ever heard of the airline. I can't imagine that it's trading this high. You can see their market cap is significantly lower, but what's up with the stock price? Allegiance up there as well. This is funny to look at, truthfully. But look, airlines not going anywhere unless they're getting bought up by another airline at this point. But yeah,
so SkyWest, I was looking into that very briefly because often I'll see them, like, all of a Delta flight between New York and Chicago was often operated by SkyWest. And I assume that they were just one of the Delta subsidiaries. But apparently they work with all 4 of the majors. So they're partnered with United and American and Delta, and they are a regional carrier that essentially the big guys will outsource, regional flights to.
Well, look at this stock over the last year, up 120%, up 71% over the last 5 years here. I mean, yeah, I know we're not talking about SkyWest today, but this is a fun conversation to kind of go into these airlines. There are airlines, since we started options trading, Ben, our airline stocks have been on our watch list. They're always around. We had like Spirit for a second was like one of our top traded stocks, which I hated while that was happening. And they were paying ridiculous premium at some point last year when they were still around or whatever. But anyway, okay. What other thoughts do we have on stocks in real life, United Airlines, if any?
My other complaint about the airlines, since I have a forum to air this, is that I suspect the earnings are going up because of the decline in the quality of product. So that, like, I feel like every tier they're trying to just like make it cheaper and cheaper, where the fares stay the same, and then now you're in basic economy where you don't even get a overhead bag, and then we're going to downgrade main, and like even the business and first class products like aren't the same quality. Like they're serving prosecco like when they used to be serving Dom Perignon, like it's just, and even the hard product, like the quality of the beds, the seats, they're smaller, they're just cutting corners everywhere, and
you hate to see
I don't like it.
And getting away with it seems.
Delta doesn't do that.
No, Delta does. Oh, they're all completely guilty of it, but United's the worst.
Well, it's just like, I mean, what are we supposed to do about it? Nothing. I mean, how am I supposed to go across the pond? I'm not taking a ship. We're well past that.
I think they say that like one of the, the difference between like stated preferences and revealed preferences, airlines, everyone always says, I want better service. But over and over again, people just want cheap. They will like be strapped to a metal tin box, like as long as they can get from point A to point B.
I lean that way. I do. I hate to say I lean that way. And by the way, like flying is as a kid, you loved flying. You looked forward to it. It was exciting. I cannot stand flying. Ben and I have had our share of mishaps with travel. Ben, now I'm thinking like when we went over to Europe, were we taking United flights? Probably.
I don't remember. Maybe.
But I'm assuming, I feel like you've been with them for a while. We've been stuck on tarmacs for hours and 60-degree winds in England. thrown off planes because the engine wasn't good and put on another one. We've had some stories. But anyway, great segment on United Airlines. It's a stock that I'm going to be keeping a close eye on, and these airlines in general. Very good.
Awesome. Let's keep this moving and let's get into learning something. So previously we've been talking about delta and theta and beta and IV, and we've talked about a bunch of the Greeks so far. We're going to actually scale it back a little bit today and get back to the basics of calls versus puts, credits versus debits, risk versus reward for each of these. So Mark, I'll hand it off to you. This is your segment.
For sure. So, of course, calls versus puts, the 101. I suspect anyone that's watching knows that a call option is the right to purchase a stock and the put option is the right to sell a stock. But I'm going to take this maybe to like the 102 level or the 201 level and say that there is no difference, that a call is a put and a put is a call. And I think that's an interesting way to look at options, and it'll make more sense as we move into kind of credits and debits. But fundamentally, whether it's the right to buy stock or the right to sell stock, the way calls and puts are priced on the same line, they should functionally be treated identically. And because of the pricing model, because of the Black-Scholes, because of this replication model of pricing that we use, that owning a call hedged is exactly the same thing as owning a put. So if you were to buy a call and sell 100 shares of stock, that will have the exact same P&L as a put. Same as if you buy a put and buy 100 shares of stock, that will have the exact same P&L as a call. So while at the expiration, at the settlement cycle, whether you're buying stock or selling stock, assuming that you can hedge these things, and it's not necessarily practical for an individual trader, but more as an education point to understand that whether you're long calls or long puts, at the end of the day, these options are about volatility. So while the call and put will be directions and, whether you're buying or selling stock, at the end of the day, really both of these options get both these derivatives get their value from the implied volatility. And if you can hedge them out, they're functionally identical.
So do you, even though they are identical, do you find yourself having a preference and lean in either direction, calls or puts? Because I do. And I don't know why I do, but I typically lean towards puts, whether I'm bullish or bearish. I form the position around puts. I don't know why, but I just do.
It's funny you say that because, one of my strategies is a broken wing butterfly type strategy. And I prefer to do it on the put side, even if I'm bullish. And like my joke is there's no reason why other than I want to mess up the put call ratio. Like because functionally it's the same thing. Like I'm bullish and I'm using puts, but not like my order flow is going to tip the scales yet, but they can do the same thing. You can express direction using either tool.
Yeah, that's funny that you lean towards puts as well. Awesome. So calls versus puts, again, as Mark said, taking it to the next level, they are pretty much the same depending how you use them. The way that PeakBot uses them, of course, is we're directional on them. With our trend spread strategy, if we're bullish on a play, we will sell puts. So when you think about a put, again, put is a bet that the stock price is going to go down if you're buying it. If you're selling it, you're betting that the stock price will go up. So if we're bullish, if we think price is going up, the bot's going to sell a put credit spread. And we'll get into credits and debits in a second here. If we're bearish, we'll sell a call credit spread. And again, calls, you typically buy calls when you are bullish. You sell calls when you're bearish. So again, we do option selling strategies. We will sell a call credit spread when we're bearish, or the bot will rather. So I keep saying credit spread, debit spread. Mark, what's the difference there?
Yeah, I think exactly to your point there that in some ways credit and debit matters more from like a strategy design perspective than call versus put. That it sounds a little confusing to, you first get into options that, wait, why are we trading calls if we're bearish? Or why are we trading puts if we're bullish? It's because in this strategy, we have a bias towards being on the credit side of things. And there are good reasons for strategies to be biased towards the debit side. So The difference between those two would broadly be that when you enter into a spread, when you enter into a trade, a credit is a trade that will pay you. And typically you are assuming you're taking on that premium and assuming a certain amount of risk. So if you're selling a 5-point vertical, that means you're willing to buy and sell that stock at those levels, which gives you a defined P&L in that range. And you're liable for that range, and you've been paid a premium to assume the risk of the stock moving across that range. On the debit side, you're paying for that exposure. And you're outlaying capital. So at the outset of the trade, you put your dollars down, and that's the most you can lose in a debit scenario. You're hoping for expansion in that kind of play, whereas a credit, the most you can win is that transactional premium, but you've assumed that additional risk in putting on the positions. So both of them can be the foundations of interesting strategies, but very much have, in some ways, a stronger bent than calls or puts. In kind of establishing, the way you want to trade a stock.
Mm-hmm. Ooh, rookie move, Dillon. Rookie move.
Unbelievable. For us, with credit versus debit, we teach about this. We talk about this in our webinars. It's like, hey, would you rather have to pay to make a trade or get paid to make a trade? And not only that, will you want to start in the green zone in profit, or do you want to start in a hole and have to dig out of it with a debit, right? So for us, we always say it's simple. Why do we love selling options? Because we like starting in the green zone. We love the credit spreads because it's defining our risk. Again, for us, when we founded PeakBot, truthfully, over 5 years ago, we were in equities trading. We weren't even touching options. And Ben and our advisors and everybody said, hey, let's start selling options. And I had no idea what it was even at that time, truthfully. I shouldn't say never. I can never say never. But right now, I can't anticipate a world where I'm doing anything other than selling credit spreads. I just wanted to add that in there. Let's keep it moving.
Yeah. I think it's very much a different perspective on what you're looking for options to do in your portfolio. And to the extent that there's an entire space for credit strategies, there's entire space for debit strategies. And I think it really, that's kind of why I find options fascinating, because they can be a scalpel for a lot of different risk profiles. But distinctly creating a credit risk profile and a basket of those exposures, that's a great way to generate some premium, use capital to, risk capital, like you're putting capital at risk when you're putting on a credit spread. I wouldn't say that one is riskier than the other necessarily, but it's more like what premia are you looking to capture in the marketplace, and what part in your portfolio are you looking to use options for?
Mm-hmm. Yeah. And it's would you rather cap your upside or cap your downside, right? For us, okay, on paper, the credit spread may be more to the retail trader in general, more boring, right? There's less upside, but there's generally speaking, less downside as well, especially when you're coming in here with the credit spreads.
Right. I mean, position sizing definitely comes into play there. I personally like to treat my trend spread positions as if they were wheel positions. Mm-hmm. And maybe I'll put a little bit more in than I would, but if I want my overall account to not be absolutely devastated from a loss, I'm going to make sure that I'm not going overboard on my credit spread positions. Yeah. And so talking about risk versus reward here, and that's the last column. Full disclosure, I have ChatGPT make these, and I'll tweak these slides a little bit. But when GPT spit this out, I didn't change the middle two bullets on risk versus reward, where it says credit spreads cap both potential profits and loss, and then debit spreads, while riskier, allow traders to capture larger profits. Maybe that's true, but I don't necessarily agree with debit spreads allow you to capture larger profits. I think it just depends on where you set your deltas for your spreads as to what your risk reward actually is.
Yeah, I agree. I don't think you can natively say that credit or debit are riskier, one or the other. It really depends exactly how you structure that trade. And at the end of the day, it depends on, the risk in that trade depends on, what the implied volatility levels are, like how much premium there might be, so neither, I think they can both be very risky or they can both be very conservative.
Yep.
Awesome. Well,
so,
go ahead.
PeakBot automates credit spreads. For anybody that is not familiar with PeakBot, we sell credit spreads. We earn premium by doing it, and our whole goal with these positions that our bots are trading for us is we want those spreads to expire worthless. And that's how our bots will make money. And that's how our bots are designed to operate in the market here. We don't do anything with debit spreads really, unless we're closing out an order. But at that point, it's just a close. It's not really a debit spread. We're not opening a debit spread. We're trading credit spreads here.
And this is our strategy is what Mark uses for his professionally managed portfolios, right? And if you're interested, by the way, if you loved learning about this, but you said, I don't have the time to act on this or trade these strategies consistently, we'll go to peakbot.com/harvested. All right. We've partnered up with Mark here, and we're incredibly excited about this. And we've been up and running for a number of months now. Go to this site. You can see a video. You could see why you would want to sign up for this. Completely hands off. You introduce automation into Mark's processes, and a lot can be done. The sky is the limit here. So there's some FAQs as to what bots do we use, what brokers are available, all that. And of course, a sliding scale on fees here. We're really filling a gap here where you can do this as low as $10,000 account. All right. And an RIA with Mark here, registered investment advisor, managing your portfolio with only $10,000. That's not found very easily out there in the market. And you can see the sliding scale of the fees here. So, Mark, if you had any other comments on our partnership here, please feel free.
Yeah, absolutely. Like you said, you manage credit spreads. You manage a couple different bots that are all going out and taking credit spread positions in a couple different dimensions, whether it's the iron condors, whether it's the trends, or whether it's the wheel. And so sort of like we were hinting at with debits and credits, they can both be interesting or risky trades. The key is kind of managing that and where it fits into your portfolio. And so a lot of what I do on the advisor side of thing is selecting the appropriate names, the appropriate timings, the appropriate sizings, because not every option is always a sale. It's about finding the right place to let these bots do their work and, execute and implement the strategy. But on the advisor side of things, what we're doing is kind of managing that from a higher portfolio perspective.
Excellent. So yeah, check it out. Go to peakbot.com/harvested, submit your application, and get on the wait list. We're moving through the wait list at a good speed right now, so we can get you in, get you running. Mark can get you up and running here very soon. So, fellas, we want to take a look at economic events this week. What else?
Let's do some economic events, and then we can wrap here. We got the market opening soon.
Cool. So,
get my screen up here.
Let's see.
So I'll fly through, and as always, guys, if anything stands out to you, speak up. Nothing really of note today. This is, again, our first full week in about 4 weeks, right? We had Christmas, and then we had New Year's, and then we had National Day of Mourning last week. So this is our first full week. And the next week, we have another abbreviated week with it's MLK Day, right?
Yep.
So the market will be closed on Monday.
So get your premium while it's hot this week.
Yeah. Get it while it's hot. Get it while you got the full 5 days. Moving into tomorrow, we've got a bunch of PPI data, pre-market coming out that, at least in my experience, will have some sort of effect on prices, but I don't know that I'm going to change my strategies. I think I'm going to keep my condors on through that. I don't know. Mark, how do you feel about condors and PPI?
I'd say in many ways, like, my perspective on condors this week is probably written by overall macro rather than like specific data points. In general, though, PPI, I'd say less interesting than CPI, but
yep.
Of course, it has the potential to move.
Right.
Yep.
Right. Other than that, moving into Wednesday, we've got inflation data. We've got some Fed speeches on Wednesday. We got 2 in the morning, and I think I saw, a couple in the afternoon. It looks like, another one in the morning here, and then 2 in the afternoon. It's not Jay Powell.
I was going to say,
but
no Powell.
Yeah,
That's four
but
different governors speaking on Wednesday. There must be something going on.
yeah, I'm not sure exactly what's happening on Wednesday, but something to keep an eye out for and something that we'll be watching. And then moving into Thursday, retail sales is marked as high importance by TradingView. Nothing really else. Then we got housing, building data on Friday, manufacturing. Yeah, so really not too many, in my opinion, not too many major events going on
Nothing
this
that's
week.
turning bots off.
I think there are a few things that are turning the cash flow AI bot off.
Okay.
I'll have to confirm that separately for those users. I actually have to go in and do that this morning and confirm everything there. Yeah, I think PPI shuts that bot off. I think as well the core inflation data might shut it off as well. So
Okay.
might only be a couple days of trading for that bot this week.
Awesome. Are we interested in doing a quick SPY analysis, or we want to wrap?
I'd prefer to wrap.
Let's wrap.
We could pull up the stock real quick.
Let's just look it up. Mark, do you have any thoughts on the week in general, quickly? Anticipations, any caution, anything?
Well, the end of last week was definitely a little bit choppy, and I think part of that was due to Thursday's pause. But overall, the market's feeling a little unsteady here, and I don't know if it's churn into the new year. We've got a decent expiration coming up. So I expect overall to see just a little bit more chop for the main reason that it's been choppy and volatility tends to cluster. And so, I think, I'm looking at where the iron condors are setting their strikes, and we're definitely maybe not collecting as much more premium so much as setting our strikes a little bit wider. That's probably the biggest adjustment that naturally happens when you're doing a delta-based adjustment. So I guess I would say that I do expect to see a little bit more movement. Not sure if it's going to be up or down, but the market does feel like there's a little bit of a turbulent undercurrent.
Okay. Ben, what's the technical analysis say down there for the week?
We are looking at neutral.
That's Condor City right there, maybe. Well, again, depends. But it's funny. I think Thomas and I looked at that on Friday when we were doing PeakBot picks. Oh, my God, Ben, we got to get your picks in for this week.
Yes, I'll get them to you.
But look at that. I mean, that you can't split it down the middle anymore. 8 sell signals, 8 buy signals, 10 neutral. Interesting. All right.
Yeah. I mean, tough because while, yes, the technicals might say neutral, as Mark mentioned, this is chop city right here.
Yeah.
Look at that chop.
That's confusing. That's giving me a headache. All right. So, well, I think that covers it, guys. Great show here. Of course, not financial advice from the PeakBot side of things here. So that's it. What we'll do here now, we will be, of course, live on Friday, as mentioned, for the automation station, just shy of noon Eastern for some PeakBot picks and a ton of other good stuff. But tune in this time next week, 8:30 a.m. Monday, for another Stocks in Real Life. Ben, you don't already have next week's picked out, do you?
No, I don't.
We'll see. But that's it, fellas. Thank you so much for joining here today. Almost I'm only delaying because we're about 20 viewers away from 1,000 today. So just seeing if we can get that number. But thank you so much for tuning in. We'll be live again a few times this week across our socials at Use PeakBot and the Tradier Hub. But another great show in the books. Thank you so much. And as always, we'll see you at the peak. Take care.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.